Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, November the 2nd. It is Fed Day, FOMC minutes. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to during the pre-market session, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so yesterday we had our main hypotheses, which were all mainly balance and staying in balance until today, until the Fed announcement. Obviously, our alternative hypothesis was a trend day with a breakdown and a break below the range low from the prior day, and then a move down into testing that 2107 area and then breaking the 2107 and going down and testing the 2100 and maybe a dip into the 2000s. Well, we were able to identify early that we were getting into a trend day and that we are likely to get extension to the low side. Did not think we would get the amount of the extension that we got, and all the way down into the 2091. And then our little friend, Mr. Sneaky, pointed to a rotation back up, and we rotated up, went sideways at 2100 as they fought back and forth to hold in the 2100s, and then we rotated up into the close, up into that measured move we had at 2107.25, and then went sideways, and then we closed down at the 2104. I said that we would, close plus or minus 3 points around the 21. It was +4. So sue me, I was a little bit off on that. But we did have a trend day. It was good that everybody in the room recognized that, and we didn't try to fade this trend. I didn't get a lot of this move because I missed it. Just to think that my initial short was 21.2475. There was 3 or 4 of us that got short up here, and we just didn't hold it. I got short several times, but then I let it go, and then I missed. I missed most of this move. I got pieces of it, but I did have a big day in gold as well, and I did get this rotation here, and I did get this rotation here up into the 07.25, and then I shorted 675 and got a nice little scalp there. All in all, it was a pretty good day yesterday. Taking a look at the news today, we already had the ADP non-farm employment change, came out at 147, expected 166, previous 202, so definitely not good news in terms of employment change. 10:30 we have crude, 1:30 we have Canadian Governor Council Wilkins speaking, and then the big news, of course, is going to be the FOMC and the federal funds rate. That will be. Now, we had a big move yesterday. Whether we get another big move today is going to be another interesting question. I doubt we're going to move much in the morning. If anything, it's going to happen this afternoon. Keep your bullets, for later in the day for the Fed, and then wait for the Fed announcement to come out, make the move, trade the third wave, and then set up for a longer trade once the direction is determined. There's not much overnight. Tomorrow we have a bank holiday in Japan, and then tomorrow, in terms of news, on Thursday we've got lot of news coming out of Great Britain. And then we have the unemployment claims and preliminary non-farm and labor costs and the ISM non-manufacturing. And then Friday, of course, we'll get the non-farm employment change, here in the unemployment rate. So a lot of news for the rest of the week. So should be some good action this week. It's nice to have some range to trade with again. We are trading on gold right at 1,300, looking for that rule of 10 to play out. I don't usually come in and talk a lot about gold, but when you're at a critical point, we were waiting for the rotation off of that 1245 40, the composite VPOC that goes all the way back to 2008, and we found our buyers and we're rotating back up. We went and hit the significant breakout, 50% of the significant breakout candle, the one that broke us down. Yesterday I traded into that and got all of it. It was nice. And now overnight we've come up and we tested the 1300, and we're currently trading right on it. I'm looking for a move up to the 1310. First target is the 1304.40, and then we've got the 1311, and 1305 is going to act as a little bit of resistance due to the fact that it's the range low, and this is a fairly long time frame balance area, but the microcomposite VPOC up there is at 1327.40. So as long as we hold above 1300, I'm looking for them to slowly grind their way up into the 1327.40 as our next big target on gold. Okay, going back to the ES, let's take a look at the market macro to micro. I like to start my day with a simple candlesticks chart with a 9 EMA and a 20 SMA. I'm looking for slope and separation, where the trend is being challenged, where we're getting continuation patterns on each time frame, and then I'll work my way down into the intraday so I can understand where we are within each time frame. Multi-year upward trend on the monthly, then at the end of 15, beginning of 16, they challenged it, and then we got continuation, and then they came down and tested the 9 and bounced, and then they come down and they're testing below the 9 now, and we're getting this possible 4-month negative pattern here. I am watching for the possibility of a falling 3, so I'm not, I don't know until this candle is complete, but if this candle turns out to be bullish like this and engulfs these 3 candles, this is a very strong continuation pattern on the monthly. I did the research last night. In the last 20 years, there's only been 5 times that the market has gone more than 3 months negative. Once in 2011, 2001, only 4 times. Once in 2011, it went 5 months. And then in 2001, it went 4 months. 2002, it went 4 months. And then 2008, it went 5 times. So, and recognize the years there; those were all pretty bearish years and big market downturn. But regardless, we're below the 9 right now. We've got to watch the challenge to the 20 SMA, and that's down here at 2065, 66 area. That's right back in that larger balance zone that we're going to look at today on the composite. Going to the weekly, you can see that we've broken down. We were at that decision point. We didn't know if we were going to break up or break down. We did break down. Now we're starting to get possibility of start of a downward trend on the weekly. We've broken out of the symmetrical triangle that we were talking about yesterday, and we're below it right now. We could come back and test it from below and then fail again. So watch this this lower trend line now. And if we come back and test it, that'll take us up into the 21.1250 area and see if we get back above it. If not, fail and get the continuation pattern down. Going to the daily, you can see that we are getting acceleration of the downward trend. We're getting slope and separation. Created a little bit of a foo bar yesterday. Possible Mr. Sneaky setting up today if we get an inside bar. But remember, it is Fed day, so you could easily get a continuation down or a big move back up to close this technical gap. But on the daily right now, the time frame is down. Or the trend is down. On the 4-hour, same thing. We got this this strong downward trend. It's accelerating. It started here, last week, and we started slowly trending, and then the acceleration down. And currently, right now, we've got a bit of a technical gap. We had a foo bar, Mr. Sneaky. This was your entry bar, and now we're starting to work our way back up towards the gap close, which will take us up into the 2106.75. That's right where our naked VPOC is from yesterday at the 06. Going to the 1 hour, we had this strong trend down, and then they found some support. Now they're coming up, and we're trading above the 9 and the 20 right now, and possibly challenging the downward trend for a move to start a new trend to the upside. Going to the 30-minute, you can see that that's got the consolidation, the break above, the hold, and then the move up, the retest, and the move up. So we've got the start of an upward trend on the daily, and I'd be targeting that 2106 if we can hold above the 2102 and a quarter, or we go bid 02 and a quarter. Going to the 15-minute, we've got the start of this upward trend. We created a foo bar, Mr. Sneaky, closed the tech gap, came down, challenged the 20, and now we're coming back and trying to get back above the 9 for a possible continuation pattern here. And then on the 5-minute, we've got this big move up in the Globex, created a foo bar, Mr. Sneaky, and closed the tech gap. It was sloppy, but it did close. Then a break below, and now we're coming back up, and we're above the 9 and coming up to test the 20. What I want you all to note is that this has been a very clean auction. What do I mean by that? Well, usually when you have auctions that are not clean or not orderly, you'll end up with the naked crosses, and you'll get a lot of naked crosses, and there really isn't a lot of naked crosses on the three main time frames, the 5, the 15, and the 30. There is one right here, but this one is one that I always talk about where it's just a little dip above and below, there is one right here at the 21.24 and a quarter, so mark that. But that is about it on the 3 main time frames. We've most of the naked crosses have been retested after they were put up. So there's really not a lot to guide us in terms of these naked crosses. So this is an orderly auction, and which means that we don't have any clear targets above or below to retest on those 3 main time frames, the 5, the 15, and the 30-minute. So going to the bigger picture, let's just zoom out here. We spent most of the end of last year and the beginning of this year down in this distribution, in this blunt area where there's multiple areas of undetermined fair value. But one of the most important things is that the microcomposite VPOC, that this should actually go all the way back to here. The microcomposite VPOC that starts all the way back at 03/11/2016, right through to the breakout here and the gap up day at 07/07. The microcomposite VPOC is all the way down here at the 2035. When they broke out, the first area that they found acceptance once they broke out of value was down here at the 2080/50. This is our current main target below, the next big target below. We worked our way up. We created the value area, which ranges from the 65.50 down to the 22 and a quarter, and we were banging on it, banging on it, banging on it, and then we broke yesterday, and we have our breakout candle. So we have a significant breakout candle, and the high of this candle is 21.25.50. The low is 20.91, and the 50% of the significant breakout candle is 21.08 and a quarter. So that is our 50% SOC, or breakout candle, BOC, and that's the target we'd be looking for if they get above and hold above that 21.02 and a quarter, where we're going bid right now. So key levels to watch are CLVN, which was at 21.07. Shifted. It went to 05 yesterday. We've got two LVNs, CLVNs now, but the key one is going to be the 21.09 and a quarter. That becomes our key line in the sand above. Our warning line, of course, is going to be the 21.0450 above, and then our key line in the sand below now becomes the 20.94, which also just happens to be close to our low of the Globex at 20.94.50. Below that, I'm expecting us to start to fill in this area right here and start develop what the most significant or most accepted price point is in this area. Currently, right now, it is 20.98.50. I expect if we can't get above the 21.04.50, that we're going to chop around that 2100 area until we fill this in, or we get news from FOMC that's going to revalue this marketplace and either take us down towards the 2085 or take us up towards the range that we just fell out of. Main target above right now is going to be that 21.15.50 above the key line in the sand, and then 21.23 and a quarter, and then a move back up into this lower balance around the microcomposite that runs from the 9th through to this breakout day yesterday, and move back up into that 21.33.50. Don't know what's going to happen, but we've got clear structure right now. If we continue to come down and stay below the 2100, I'm looking for us to eventually work our way down towards this 2035 and into this area of bluntness and all this undetermined fair value between 55, 46, 34, I call it 40, and 35, and even lower down into the 2025. So just keep an eye on once we move. The next big key line in the sand is going to be below 66.50. And we talked about that 2066 earlier as being a significant area to look at. And if we get below it, then we put ourselves back into this this longer term distribution area, which still has a lot of repair to do. Okay, so let's take a look at the overnight. Come on. So in Globex, we opened up and we broke below that LVN from yesterday, came down, chopped around here, came down and tested the lower part of this distribution. Didn't get all the way down to the low at 91. We did get to that 94.50 chop there, and then we slowly worked our way up. And then once the Europeans woke up, they took us all the way back up, broke above the 2100. Last night I posted in the room that 2100 was likely to be our LVN. and you can see right there that our LVN, excuse me, I got to get into a trade here on gold. Okay, sorry. So we've got a bit of a double distribution. This lower distribution, though, is very toothy, very blunt. So if we get down in this area, I'm expecting a lot of chop. But the most dominant is where the VPOC was at the CHVN at 98.50, but most of the time it stayed down here at 97. So below 2100, I'm looking for a push down into these two numbers and chopping as we we further auction this area off. It was a little bit better kurtosis yesterday, and that was around the 2098.75. So they came down and revisited that. Got a bit of a cup and handle here in the Globex. So let's take a look at that. I don't know if it's valid, so let me just draw it out here for you. Let's see if it's valid. It is valid. This little dip here doesn't really matter. I use 61.8. Bulkowski uses 65, and I'm looking for the closes there. So this would be a valid pattern. So if we do break out, let's look at our extension. Notice where our neckline is, 2104.50. What's 2104.50? Our warning line. And then our 61.8 takes us up into that 2110.50, and our extended takes us up into the 14.25. Both two areas that we're watching for. And the 38.2 happens to be the 50% of the significant breakout candle retracement. So 3 levels on the fib extension on a fairly decent looking cup and handle. So just remember, it's just a pattern. I would not try to trade it until we get the breakout above the 2104, but it is a good pattern to keep an eye on. So our overnight high is up at 2105.25. Couple ticks below our naked VPOC at 2106. Our overnight low is down at 2094.50. And our overnight VPOC is shifted up to 02.25. I doubt it's going to move. Now that it's shifted up, just shifted up in the last 15 minutes or so. And then we have the LVN and the midpoint. Where is that at? Oh, it's right at 2100. I don't make this stuff up, man. Called that perfectly last night. Okay, so that's about all the information that the overnight is going to give us. Overnight inventory is net neutral to negative. So if we get above that 0450, the shorts are those that got short the whole last night are going to start to panic, and we could get a short squeeze. So just keep that in mind this morning. Our 20-day ATR is running at 19.63, so off of the overnight high of 2105.25. Our downside daily ATR target is down here at 85.75. our weekly ATR is running at 47.7675. So off of the weekly high so far at 21.30.50. Our downside weekly ATR target is down at 82.75. So we have this cluster down here of the naked VPOC, the naked close. Our naked close is sitting right on our daily ATR downside target, and we have our weekly downside ATR target. So this is a key area to watch down here. If we break below that 82.50, then I'm looking for that move down into the 66 and expansion of the weekly range to the downside. Our upside daily ATR off of the low overnight is 2094.50 plus the 1963, which brings our daily upside ATR target to the 14.25, which just happens to be near the IB and near the value area high. But let me make it perfectly clear. We had a trend day yesterday. This is not a valid value area. This is a very wide value area. It's not going to have the influence that it does on a day that has got a normal Gaussian distribution. So let's look at our levels. Obviously, we've got the LVN from yesterday, the significant LVN, which also happens to be our key line in the sand, and that is sitting right there at the 2109 area, and that's going to be our key line in the sand today. And then, of course, we have our 50% of the significant breakout candle just below it at 2108.25. That's going to be a target. And then we have our 2100, and then we have our overnight low, which is also a LVN from yesterday, in an area that is this 94, which is a bit of a warning line, and CLVN. So that is going to be a trade area. And then we have the range low at 91. The target below the 94 is, of course, going to be 92.50. And the target below the 2100 and above this 94 is going to be this area. Now there's two. There's 97 and 98.50. I'm going to use the 98.50. And that's that to the lower side. To the upside, above the 2109, we want to target the 1150. And above 1250, I'm going to be targeting the IB high just in front of it at the 1450. Well, call it the daily upside ATR target at 1450, and then the secondary target is going to be the 1750. And minor resistance at 20.25. And then, of course, we've got the value area, microcomposite value area low at 23. But this is pretty thin, so I'm actually going to move it up to the range high at the 25, and anything above that I'll be targeting that the range high from Monday at 27.75. And then anything up in that area, we're going to be targeting the 33 now, 33.50. And then because it's Fed day, we've got to look a little bit bigger just in case. to the upside and to the downside. Got a little bit of this 35 no longer is a trade area. It's a target. Come on. Delete. This is our next big target. I'm sorry, it's target. This is the next big target above. And 35 just above it. And then our weekly upside ATR off of the low at 2091 is 2138.75. And then above that, we've got 41 in our next big key line in the sand, which is all the way back up at that 44. And above that, we've got that 53. So those are extensions to the upside. To the downside, we basically talked about them in the bigger picture, but let's just put our trade levels in here. We've got the 94 already in. There's 88.50. That's going to be our warning line. And then our main targets down here, which is basically a cluster between 85.75 and 80.50. And then we've got the 72. Where's the value area high? 76. So 76. And then 66.50 becomes our key line in the sand below. And below 66. 56. $54.50. In fact, I'm going to move 56 down to $54.50. $46.50. You'll notice I'm not going to be putting in trade areas down here because of the fact that it's so blunt that I'm just looking at the targets, and then we'll have to use shorter time frames. But the next big one is down at 2035. 550. That's our CVPOC and major magnet. Okay, so there's all our levels. Now you notice that I went out. I don't necessarily anticipate that we're going to hit all these lower or upper levels. What I'm doing is I'm setting up for the next big move, and you know, looking at above and below, because I'm thinking that now that we've broken out of that balance, if we hold out of that balance, then we're going to get a bigger move away from that balance that we've been stuck in. And of course, we've got so much that can revalue the marketplace here, you know, with the FOMC, with the non-farm payroll, and ISM, and of course the big one, which is the election next week. Okay, what are my hypotheses? Well, we had a big day yesterday, so I'm looking for balance out and a battle around 2100. This is my main hypothesis that's, going to have multi-levels to it, but the main hypothesis is that we're going to battle the 2100 coming into the Fed. And we're likely going to fill in between this area between 0975 and 8850, and it's going to be choppy. So I'm looking for an open auction in range, a rotation up into the 2106 area, maybe even the 2109 failure, and then moving down, okay, towards the 2100, chopping around the 2100 and getting a push down through to the 9150, chop here, okay, and possibly start working our way back up and chopping and closing somewhere down here between the 91 and the 2100. So hypo 1 is open auction in range, a move up into the 2106, take out the overnight high, maybe push through to the LVN or the midpoint, find responsive sellers, start moving us down, testing the 2100, chopping in the 2100, failing and pushing down towards the overnight low and yesterday's low at the 2094 to 2091, and then finding some buyers and just chopping in here, moving back towards the 2100 and closing somewhere down here. That is hypo 1. Hypo 2 is an open auction in range, a failure to hold the 2100. I'm not saying we won't test the 2106 in hypo 2, but chop in this area, but fail the 2100, push through down into the 2091, fail, and get continuation down into the 2083 to 2080 range down here, and testing this cluster down here. So hypo 2 is open auction in range or open test drive, test these key areas, fail at the 2100, push down into the prior day low at 91, chop, and then get continuation down into the 2083. That is hypo 2. Hypo 3 is an open auction in range, a failure to break below the 2100 or a dip down below 2100, find responsive buyers, rotate up through to 2106, chop around here, push up into the 09, fight it, and then get the continuation and move up into the 2018 to 2020 area, maybe a late day probe up into that value area, and testing the range high up here, maybe even back up into balance into the 2133.50. Just, if we do get a very positive move off of the Fed news. And then hypo 3 is open auction in range, failure to hold below the 2100, move up to the 2109, chop around there, and then push through up into the 18 to 20 area, and then push through, break the Globex or the RTH high from yesterday and push up into the 33 level. Hypo 4 is open auction in range and failure to break out, okay, of the range between the 97 and the 09, and just chop in here and just fight that 2100 level again and have an inside day for the possible FUBAR Mr. Sneaky on the daily. So that's my 4 main hypotheses. As always, be careful today. It is Fed day. We're currently trying to hold the Keltner center line. A move to the upper Keltner will take us up into the 2107.25, more likely by the time we get there to the midpoint at the 2108 and this 50% of the significant breakout candle. If we can't hold the Keltner center line, look for them to test the 2100, fail, and come down towards the 95. This will likely be closer to 94.50 by the time we get there. So that's my pre-market session. As always, trade well, trade safe, and we will catch you on the flip side.